Before we get into anything today, I want you to really focus on this one fact. Most people watching Opendoor right now have no idea what's happening behind the scenes. They're looking at the price, they're looking at the tiny dips, they're looking at the flat volume, but they're completely missing what might be one of the most uncertain and unpredictable weeks the market has seen in a long time. And if you own Opendoor, or you're even thinking about touching it, you need to hear what's actually driving this stock right now. Because after today's breakdown, you might look at this ticker very differently. Stay with me. This is going to matter more than you think. All right, guys, welcome back. Today, we're diving deep into Opendoor and everything happening around it. Not just the price, not just the daily candles, but the real forces behind the movement. Because even though the stock is trading pretty flat at the moment, there's a lot going on underneath the surface that most retail traders are not paying attention to. Let's start with the numbers. Opendoor is moving between $7.10 and $7.42 for the day, with only about 12 million shares traded so far. That's extremely low volume compared to what we normally see when this stock gets momentum. But instead of looking at that and assuming nothing's happening, you have to look at why this is happening. The overall market was hit with a wave of fear after the updates coming out of Japan about their recent quake. Now, the Japan news didn't destroy the market, but it shook confidence. Markets are emotional, and when confidence drops even slightly, volume disappears. And that's exactly what we're seeing today. When you look at the secondary market activity, the bid and ask sides are split almost perfectly evenly. That right there tells you traders don't know what direction to commit to. And honestly, it makes total sense once you look at the bigger picture. Because this week may end up being the first interest rate cut where the market isn't fully confident ahead of time. Right now, the probability of a 25 basis point cut sits at 89.9%. That sounds high, but historically, these decisions were locked in at 100% certainty weeks ahead of time. And when you have a decision this big and a market that is this unsure, you get exactly what we're seeing today. Low volume, jittery behavior, and choppy moves that don't always make sense. There hasn't been any major macro data released today. No shocking tweets, no big interviews, nothing from Trump that would shake markets. But everyone is waiting for what comes next, tomorrow's ADP employment data and the JOLTS numbers. These two reports can seriously shift expectations on what the Federal Reserve does next. Now, bringing this back to Opendoor specifically, the company itself has been quiet. No new SEC filings, no new headlines, and surprisingly, not much chatter even on social media. Cass and the management team have their heads down, and honestly, this is probably intentional. Opendoor used to be treated as a meme stock. It had a cult-like following. People bought it emotionally instead of logically. Shorts piled in because retail owned a massive chunk of the float. And meme-ish stocks always attract short sellers like moths to a light. But this time feels different. Management seems focused on rebranding Opendoor as an actual long-term, credible real estate disruptor. Not a hype stock, not a pump and dump, not a community stock. And that's exactly what the company needs if it wants to survive long-term and not just spike, crash, and repeat like so many other retail favorites. But let's talk about the short sellers, because this part is important. Shorts increased their positions by 257,000 shares, bringing the total short interest to 13.63% of the free float. That's roughly 106 million shares short. But here's the weird part. Shares on loan are only 75.6 million. That means more shares are being shorted than are actually on loan. Every time this happens in the market, people start whispering the same thing: manipulation, hidden orders, maybe even naked shorting. I'm not saying that's what is happening, but the math doesn't lie. Something isn't adding up behind the scenes. Moving on to options activity. This is where things get interesting. Calls are sitting at around $1.7 million in premium and puts it about $313,000. That means 51% of today's options flow is bullish. But because the trading volume is so low, most of this movement is coming from algorithms. That's why the stock feels stuck. That's why the price can't pick a direction. Algorithms are in control today. Humans aren't pushing this stock. Bots are. If you look at expectations, bulls see Opendoor moving toward $8. Bears expect the stock to drop below 6.50 cents. Given where we are now, bulls have slightly more room to be right than bears. Dark pool data isn't showing anything crazy. Some hedge funds are a bit more active today, but even then, it's quieter than usual for Opendoor. And this actually fits today's theme: low volume, low conviction, sideways action. Technically speaking, Opendoor is sitting around $7.13. It's trading between its pivot and the S1 support level. The next real test is at $7.47, which the stock already touched today when it hit $7.42 before pulling back. Your major support level is at $5.85. That sounds far, but with a volatile stock like Opendoor, these big gaps between support and resistance are normal. It recently bounced off the 50-day moving average, which usually leads to a period of consolidation, exactly what we're seeing now. It's also trading below the 10-day moving average, which sits around $7.38. Ideally, you want the stock to close above that to flip short-term momentum positive. The stochastic RSI is around 63, which basically means it's neutral. Not oversold, not overbought. There haven't been any new analyst ratings since November 12th. And honestly, that's probably for the best. Opendoor doesn't need new ratings right now. It needs execution. It needs results. It needs to show Wall Street and retail investors that it can disrupt the housing market in a meaningful way. Management is clearly avoiding hype and noise. They aren't making bold claims. They aren't tweeting random statements. They're keeping quiet, keeping focused, and doing the work. That's what actual long-term companies do. Trump did mention earlier today that he's planning to heavily support AI innovation. And hey, if Opendoor plays its cards right, that could become a major advantage for them. But again, words don't matter right now. Execution does. A 25 basis point cut could improve housing sentiment. But at the end of the day, what really matters is whether consumers start spending again, whether they're moving homes, and whether Opendoor can capture that market with efficiency. So let's bring this back to you. What do you think about Opendoor right now? Are you adding more? Trimming? Holding long term? Or staying out completely? Let me know in the comments. I'm curious to see where everyone stands. If you want a deeper breakdown on Opendoor's long-term potential, its business model, or competition analysis, just let me know, and I'll make a dedicated video on that. This video is for educational and entertainment purposes only. Nothing in this video is financial advice. Always do your own research before making any investment decisions.